Ladies and gentlemen, welcome to the FinStep Asia Token Bytes podcast, the special Money 2020 Money Pot edition. My name is Mushir Ahmed. I'm the founder and MD of FinStep Asia. I've been in fintech and capital markets for the last 2 decades, including the last decade as part of the Fintech Association of Hong Kong as a co-founder, and until recently a regulator with the Virtual Assets Regulatory Authority of Dubai. Today is an exciting day for us because we are going to be talking about a topic that has gained a lot of traction over the last year, in particular when we are talking about how blockchain is changing institutional finance. With us today is Mr. Henry Zhang, who is the founder and CEO of DGFT. We've done a lot of interesting work and gained a lot of traction over the last year with big institutions. Henry, welcome to the Token Bytes podcast. How are you doing today?
Good. Thank you for the invitation.
Thanks for joining us. Look, it's been a topic we've seen gain a lot of traction, as I mentioned, where starting last year or so, once BlackRock came into it, there was more noise around it, there was more interest. However, this has been building up for a few years before this. Right?
Yeah.
But before we take a deep dive into real-world asset tokenization, I do want to spend some time talking about your very rich experience, and I'm going to use the term very loosely, in TradFi, right, traditional finance, but that comes from, and I think that's a very important play when it moves into real-world asset tokenization, as well as the understanding of traditional finance is important. But you've had senior roles with very large banks in Asia, so we'd love to hear a little bit more about your career journey and how you reached the stage of founding DGFT.
Yeah, I'd love to answer your question. I have been spent more than 2 decades in the so-called traditional finance.
Yeah.
I don't think TradFi is an negative word.
Sure.
TradFi, in other words, is a mainstream finance.
Yeah.
So I have the pleasure and the opportunity to work in the mainstream traditional finance for more than 2 decades. I've been working in Citi, Standard Chartered, and also East West Bank in my last 20 years.
And you had very senior roles, right? So how did your career journey proceed in banking? What were the key things? What attracted you to finance as a young man? And then how did you see that growth, especially in Asia, for banking and finance?
Yeah, I do have a strong interest in finance from the very beginning. So the key reason I joined is driven by the strong passion, because I believe finance, at the time when I joined back to 20 years ago, I foresee it will continue to be a fast-growing industry.
Sure.
Actually, the same logic. Now I believe financial industry still have a lot of room to grow, but just grow in a different way.
Yeah.
So in the now I'm doing fintech, Web3 related fintech. I cannot claim myself as a Web3 native, not latest Web3 OG in other words, but I'm pretty much as a Web2 OG. As you asked, I've been doing multiple things in the financial industry. I've been given the chance, I do appreciate. But one of the things really making a difference as a highlight in my career is back to 25 years ago.
Sure.
That was 2000.
Yeah.
That was internet time.
Correct.
My job function at that time was the e-commerce head.
Okay.
Within Citi. 25 years ago, there's an internet coming up. A lot of similar topics as today. We can touch base on it later on. Basically, at that time, everybody be convinced internet will be the future. People are very aligned in terms of what the future, 10 years later, what the internet will be.
Mm-hmm.
But the people will be very different view in terms of what the 10 months later will be.
Sure.
So I got the chance to be the first one of the early batch people to doing the internet in finance. So I built the first online RMB payment system, system. That was back to 2000, 2001.
Wow. Okay.
That one actually have a lot of related impact in terms of what I believe today and I believe will work in the future in the Web3 context.
So I think it's an interesting thing to build upon, right? As you said, the dot-com boom and bust, or at that time, a lot of people thought, okay, after the crash, this is all done, 99 crash. But that wasn't the start, and Citi has over time shown moments where they are ahead of the markets in some senses.
Indeed.
And when you're building a banking product or service for a newer industry, what were and you touched upon it, so what do you see as similarities with that, which now is very prevalent, right? Especially in Asia. And globally now, e-commerce is second nature, right? Most people are ordering something or the other every day using e-commerce in some countries multiple times a day. In India and China, I think it's very normal for usage 3-4 times a day at least. So, and now we talk about Web3, you mentioned about the panels. We'd love to hear how you see the two play together and how you expect traditional finance to respond to it.
Yeah. First of all, I think financial industry as an industry is always as an early adopter of new technologies.
Yeah.
We call the traditional finance TRIFA, right? But financial industry has a track record of early use of new technologies. Telecommunication technology, PC, computer, internet, and others. So this time coming to next generation of internet, so-called Web3, or even AI, I don't think the financial industry will miss this trend. That's number one. Number two, every time when the new technologies coming out, especially those we call them novel innovations, when the generational technology come out, that will change the whole industry landscape a lot. The immediate last time, I would say, is internet. That's basically about 25-30 years ago.
Correct.
And the internet. Then before that, there's a lot of paper-based, a lot of physical kind of contact type of make transaction happen.
Yes.
Moving a lot of paper-based. So with the internet, a lot of things are moving. We call it online.
Yes.
Then become electronic. Then step by step, it's become a very normal. People think is how the financial industry serve the people, from payment to capital markets and to many other things.
Sure.
Now quickly, 25-30 years passed, and coming to another wave of generational technology. It's called the blockchain-based Web3.
Yes.
Then when I see that one, I would say, as normal, every 20-30 years, there will be a generational technology come out. And the people should look at and study and think what's the impact. And I would say impact will be similar big and even bigger. Why? Because the Web3 technology, blockchain-based, is a feature even more relevant to the financial industry.
Fair.
And that will be the thing come out. It is still the early stage, relatively early stage of the Web3 adoption. Just like 30-25 years ago was the early time of internet adoption in the financial industry. So again, first of all, I think the financial industry will not miss this trend. Number two, although it's relatively small, but it will come up faster and big.
I think it's a good segue to talking about what made you leave working for some of the largest institutions in the world in a very senior position. I wouldn't say comfortable life, but we accomplished a lot to go dive into the world of being an entrepreneur, especially in an industry which a few years ago was still young, right, and not necessarily seeing a bright light. What was your motivations for that?
I started DGFT, this project 4 years ago. That time, as you mentioned, it was even earlier.
Yes.
But that was early in terms of something big happened, especially the DeFi. The DeFi summit. DeFi means, it's more like a technology, I would say features about DeFi is. Then this thing come out based on the blockchain and the so-called self-custodian, point-to-point can be settlement and clearing can be the simultaneously. That's all the features, general features of DeFi. These things come out based on my past knowledge. I just believe that one can solve a lot of issues which the financial industry find it very difficult and challenging to solve. Like cross-border, build the trust transactions between two parties, they don't know each other well. That would be big. Driven by this passion, I would say, looks like history will repeat itself again. And the question to myself is, I definitely want to participate. It's exciting of the future. But to choose the way, how do I participate? Two options basically. One is continue to be on the established platforms.
Fair, yeah.
You study it and use it.
Yeah.
Or since it's pretty early, do I want to choose another option is be a builder?
Correct.
To build it. It definitely will be early. There will be some journey in years, but you can be the early builder to do that. My choice, obviously, looking back, was the second one. I want to be the builder to give it a try.
And it's, as I said, it's been 4 years, and so maybe for our audience, it would help understanding what DGFT does, but you will also talk about how your services and products have evolved, say from where you conceptualized 4 years ago to the last 2 years where you've seen a lot of traction with the big institutions.
When I started this initiative, the thinking is like this. Blockchain, when we talk about blockchain, people talk about two things. One is blockchain as an asset.
Yes.
Another is blockchain as a way. This moment, blockchain as an asset or blockchain generated assets like BTC, other cryptos, ETH, Solana, this kind of native crypto assets is become more popular and accepted by more and more people. What we are focusing on is actually blockchain as a way. Why we have this kind of crypto assets? Because of this technology generated assets in the way of token.
Sure.
But look at like a BTC, when the white paper come out, they're talking about the peer-to-peer settlement system.
Yeah.
That's very fundamental. That's fundamental, even maybe more significant compared to like crypto assets like BTC as an asset. So as a way. So this is a way we're focusing on using this way as just another wave, another generation of digitization. And using this technology will apply to the broader financial industry, the impact will be bigger. So what I'm focusing on is using blockchain as a way to further upgrade the financial industry.
And how is that happening? What are the key things that DGFT does? And why did you narrow down to those products?
Yeah, there are many ways you can apply this technology to the financial industry. Of course, we have to choose. The one we choose is to apply this technology, especially DeFi-based blockchain technology, applied to the asset side. Now we have a terminology called the real-world assets, RWA, but this is an asset with some reference to the fundamental values. Number three, we want to build a platform to distribute, to exchange, and to trade those assets. Because this technology is global borderless, very suitable for the capital markets, which as you also know, capital markets veteran, you know, the financial market, the markets is very comprehensive, but still there are a lot of room to improve. That's the technology can improve to achieve the so-called improvements. Envision.
Yeah, you're right on that. You're seeing a lot of movement in the traditional finance fields of things. And earlier you touched upon the point about how financial institutions have largely been very progressive in adopting technology. When I talk about fintech in the lectures and others that I do often, I'm like, first example for me for fintech is the telegram machine, which was primarily used for sending information about stock markets in the US. And as having started my career as an electronic trader, technology was a very important thing. 20 milliseconds made a big difference to my trade. I was pointing and clicking. But you did see AI being adopted by millennial capital in the 80s itself. So it's been quite proficient, so they understand it. However, what's became, I feel, a bit of a burden recently over the last 10 years or so is you had a thicker layer of regulations that came in on governance and everything else. But because of that association of crypto as an asset, there was the impact on blockchain and tokenization of traditional financial instruments, which, if you look at most regulators globally, were very accepting, right? They're like, this is a security, you're tokenizing a security, it's a tokenized security, more or less falls under a framework, and we're happy to do it. You've had big banks like Zhang and others tokenize bonds using SG Forge many years ago, and UBS themselves attempted a UBS coin a few years ago at JP Morgan as well. I mean, a bunch of other examples that we can talk about. So now you are in a phase where there's more action and momentum because of regulatory clarity in the bigger regions.
Yeah.
So you have partnered with some of the largest investment management, asset management firms in the world, not just in the region, right? How did these partnerships come about? I would love to hear that journey of finding these partnerships and helping them build, because there are many people with very rich experience in traditional finance who understand blockchain well, who are going out to set up their own ventures, but that journey for them is more complicated, and understanding how to bring in the bigger names, because often the bigger names want to partner with large names as well for a multitude of reasons. So we'd love to know why, how you were able to attract them in terms of being a newer entity and getting them on board.
Yeah. Which actually you touched upon a couple very, very important topics: regulation, institutional adoption, etc. Let me just pick up this so-called big names coming in. This is institutional adoption.
Yeah.
We do especially in the last 6 months, is we issued a couple of products. The asset provider, including UBS, including Invesco.
Yeah.
They are global tier 1 names. We are very excited and honored to see these names coming in, and the DGFT be picked as their distribution partner as a platform. This is not only important to DGFT, I think it's very, very significant to the industry.
Sure.
So-called institutional adoption. You also mentioned early, like BlackRock, they issued a money market fund called Widow.
Yeah.
That was about a year ago. UBS is about 6 months ago, and Invesco was last month.
Yeah.
Now we see more and more coming in. That's very important, but looks to me is also a very natural adoption curve.
Sure.
When some new names start out to do pilot, something POC, proof of concept, then later on, a lot of smart people in the mainstream finance, definitely,
Yeah.
they also see the trend, and someone will be the early mover,
Correct.
want to do it. But once they come in, they bring in more than the asset itself. They bring some other features, good features, values for this new trend.
Sure.
Institutional adoption, that's what I call it institutional adoption.
Yeah.
Because the quality of the underlying assets, very quality, and also the way they organize the assets are very governance, etc. are very, very important. It's also related to the regulation you just mentioned. We can talk about this later. So when the regulation comes in, it's also these kind of names are very good. So set the new standard.
Correct.
This is a standard for good. This
Yeah.
is a standard for sustainability and scalability.
Correct.
So that's institutional adoption. We can touch many other aspects about why institutional adoption is very important. I just mentioned these couple of things.
I would love to hear what these products are and why do they need to be tokenized versus running off the traditional finance rails, which have been fairly. You would say you have reached T+1 in most cases for settlement and etc. Do you really need real-time settlement? Do you really need parallel clearance as such? So why are these big firms looking to tokenize these assets and get into RWAs?
First of all, I think the names, as I mentioned, they are very visionary. They are very forward-looking.
Sure.
They are the pioneers. So I have a lot of respect to those institutions. Then talking about the asset adoptions, there's a curve. In the future, I think everything can be tokenized. Just bring everything on chain.
Correct. Yeah.
Like 25 years ago, we talked about bring everything online.
Yes.
Now
Yeah.
we'll bring everything on chain. Similar topics, but there's an adoption curve. Not day one bringing everything on chain.
Mm-hmm.
Look at current assets. You can call the standard assets, or even some people call the borrowing assets. The borrowing assets is good to me. Why? Because those assets like the money market fund,
Yeah.
T-bills, etc. They're easy to understand. So the people don't need to ask too many questions of what are the assets.
Correct.
They just focus on the new representation of those assets.
Correct.
Then look at how to use those assets in a new format.
Mm-hmm.
It's no longer paper, low efficiency. Now we go to electronic already.
Yeah.
Then the next stage is in tokens.
Yeah.
Then the people will look at let's debate and think about why money market fund in the tokens can unlock or evolve some new applications, use cases.
Sure.
But then things quickly evolve. Look at Invesco. Of course, they have a money market fund as well, but Invesco also choosing this called a private credit.
Okay.
Private credit fund, which is different from the money market fund, but still fixed income, a pretty standard fund, and a reputable name. Then you see the supply become richer.
Sure.
Then down the road will be more and more richer and richer. So this curve will quickly, evolve itself.
And the UBS product as well. We'd love to hear the product that you launched with UBS.
Yeah. Well, I'm not selling this product for in this podcast.
No, but I just want to understand what is the product so the audience gets a sense of how this is evolving.
Yes. Basically, UBS, they provide a fund, it's a money market fund.
Okay.
UBS has already done for decades.
Yeah.
It's one of the leading supplier of this kind of assets. It's a money market fund.
Correct.
Money market fund has its own features. It's ultra short tenor instruments, T-bills, bank deposit, repo, etc. So this money market has a feature is the liquidity is very good.
Yes.
The underlying value is very stable. Number three, they pay reasonable returns. Given now the relatively high interest environment, they pay 4 to 5%.
Yeah.
So this is the feature of money market funds. Then the people use money market funds for multiple use cases, like as a means of deposit, treasury allocation. That can be the as collateral because it's very stable, liquid. Can also be as the so-called settlement. Is for the treasury allocation and also for the collateral use case. That will be the major use cases for the stable liquid funds, and they can provide some decent returns. Then in the token way, as you also mentioned, is, because token, the clearing and settlement, for example, is simultaneous, which is very different from the current centralized way. Clearing, settlement are two steps.
Correct.
You need to reconcile. That's what we talk about, become T+1, T+2, even T+0 means end of day. Then go to the blockchain token base. Everything is talking about simultaneously.
Yeah.
It is real time. When was it real time? It's become seconds, right?
Sure.
Later on, maybe even milliseconds, but now it's already achieved in seconds.
Sure.
And either settle or no settle. So it's a risk management, it's efficiency, and it can be 24/7. With this kind of features brought in because of the technology, underlying technology, some other values can be unlocked.
Sure.
And then the margin settle is a pain. You need to look at because the market is moving every second.
Yes. Yeah.
But the risk management, if you can match that, then can solve a lot of risk management and efficiency issues in the further upgrade the current financial issues.
You bring up a very interesting point there, where sometimes people talk about from the traditional finance world, speaking about saying that, hey, you could probably do real-time settlement in today's world with the existing technology, possibly, right, in some instances. But one of the reasons they say they would prefer a slight delay is for risk management and other elements that kick in, and just the incremental benefit of doing real-time versus end of day may not be so significant to make that technology move. So we'd love to hear what your thoughts are on that comment.
Yeah, I would say the new technology just give us the new options. Not necessarily you need to replace completely of current what it's doing.
Sure.
But just give you new options. Some things you need 24/7, some things probably don't need.
Yeah.
Then you not need to move everything to 24/7 simultaneously. This is just one settlement. You were traded before, on the trading side and also the margin trading, right?
Yes.
With leverage. If you are the people providing the margin and provide the lending based on margin, you want the real-time settlement. Otherwise, markets maybe a couple seconds or a couple hours can move very crazy.
Yeah.
So you want to mitigate your risk, right? That's the use case, but some won't probably not. That's why different type of RWAs in the token, they have different usages.
Yeah.
And I'll probably give another example is in recent days, the gold price went up a lot. The people probably from the reserve and from the anti-inflation purpose want to hold the gold. Very legitimate needs.
Yes.
But on the other side, you're holding a gold asset. You probably lose the you lose the liquidity because you're holding the gold. The value is there, pretty stable. steadily goes up.
Yeah.
But you lose the chance to participate in some other volatile markets, right? Because the gold is stuck, the liquidity is stuck. Then if we can, there's some way is you can achieve both, satisfy both. You're holding the underlying asset, but we give you the value, we call it unlock your liquidity.
Sure.
Allow you some trading on some platform, no matter you trade stock, fixed income, FX, or cryptos. You can trade, but how to achieve it? Basically, is gold asset as a collateral.
Yes.
Then you can take advantage of some market volatility. You take a view, you can get in, buy low, sell high.
Yes.
If your choice is right. Then if you can combine these two, then bring in the topic is like cross-market, cross asset class. Now the financial market, the different asset classes, you can trade gold,
Yes.
you can trade stock, you can trade cryptos, but isn't it on different marketplaces?
Yes. Yeah.
Then you need to move around. There will be efficiency loss,
Yes.
and maybe some friction in the cost, and maybe some errors in the risk management. But if there's some technology allow you to trade across the market, across the time zone, isn't it good?
Yeah.
Then the token blockchain can address some or even maybe substantially part of the demand.
I agree. I think there's also the conversation we haven't had so much recently, but there's a bigger need is interoperability through chains.
That's called interoperability.
Right. Yeah, and once you have that interoperability, which not just you are seeing chains becoming more easy to be interoperable because there are bridges and just mechanisms that are making it easier, and newer protocols are focusing on interoperability. But the other element is the combination of those with smart contracts across, right? So
That's
if triggers can happen all real time, can bring in the governance to do a double check, etc., and then trigger. So if you did want to put a small check as a trader, the smart contract could be that check to be the throttle before a flare up and that becomes a discontrol, right? As we come towards the closer end of our conversation, I just wanted to quickly touch upon this key element I was trying to bring up about tokenization, where a lot of people confuse tokenization with fractionalization. Being not all tokenization is fractionalization, right? And that is usually a narrative used by people saying, oh, here is something worth $1 million, we'll fractionize it, and voila, liquidity is going to be created out of magic, right? My belief is unless the product is of investable interest, no matter how much you break it down, there's not necessarily going to be liquidity. So, and the second question that we do speak and hear a lot about is the challenge that some companies face, especially when it comes to distribution or listing, is how liquid is it from a secondary distribution perspective? The first level primary distribution is fairly okay, but the secondary distribution or trading becomes the challenge for you to get out, right? How are you seeing, how is that being solved? Do you feel, are we getting there, or is it still some more time to have that consistency globally?
If I may address the question from this perspective is, when talk about RWA or SS tokenization, right, there are different perspectives. I would say there are maybe three major topics. One is tokenization, number two is distribution, number three is application. Tokenization is basically bring assets on chain. You have an on-chain mirror or twin. That's a more technical work. Distribution, especially for that financial assets, you need a license, blah blah. Then the regulation and the licensing kicks in. You need to distribute. That's the current stage. We have more and more assets on chain already, and I start to distribute. But didn't have a big impact yet because we need to move to the third stage, application. That's the application coming to the point is that because of people fractionalization, they want to buy. That's the feature. And application depends on the feature. Because of 24/7 settlement, it's a feature. Or because of others. And then you have these features like a small ticket, fractionized ownership. And you have a 24/7 real-time settlement. Then you can build a lot of applications like composability. That's a composability and a interoperability. Across the market, you deposit or collateralize asset on this chain. You can buy from another chain or another asset class, another time zone type of thing. So I think the future down the road, if I may make some forecast, I would say applications. A lot of smart people are working on different type of applications or use cases. never come out. Just like we think internet from the very beginning, we think just maybe sending email.
Yeah.
Or maybe finding some information.
Correct.
Now, definitely more than that.
Agreed. Babe, I think this is a perfect moment to end the podcast on. A lot of insights. I think there is that journey that we talked about, and very interesting elements. I do agree there's going to be the interoperability and the applications that can be built on top, but more so thinking from a capital markets use cases which can bring in the liquidity from a secondary element as well. Henry, it's been a pleasure having you on the FinStep Asia Token Bytes podcast here at Money 2020 Moneypot. Thanks once again for joining us today.
My pleasure.
And audience, stay tuned for more podcast insights from industry leaders like Henry on topics of digital assets and fintech. Go to our website, go to our YouTube page and our podcast links to hear more. Thank you.